3, 2, 1, go.
Hello, family. What I thought I would do is give you a breakdown of the G20 and the B20. This is because in my social medias, I've been inundated with a number of questions and requests. People asking, what did I think of the G20? What did I think of the B20? Did I go? What did I think of the deliberations or the drama that surrounded this G20 and B20 summit? So here is my quick take on the G20. First, it really matters what you call this G20. Do we call it the boycott summit? Do we call it the global south takeover? There could be trillions for transition, whatever you want to call it. But what is pretty clear is that this is a momentous time in history. Let's talk first about the symbolism. It's important that the G20 is held for the first time on African soil, in my country of birth and love, South Africa, the greatest country in the world. I should tell you, everywhere in the world I tell people this. I should also say that last week I spoke at the Time Africa gathering around G20 and B20, and I said to the people there, welcome to South Africa, the greatest country in the world. So I genuinely believe that we live in the most beautiful country in the world. But what does this summit mean, not only for South Africa, but also for the people in Africa, the global south as well, and then, of course, the rest of the world? So let's get into some of the details about what's happened at this summit. First, let's do some context setting. So I've got my notes here, just so I make sure that I'm on the vibe in terms of what the facts are. And just to make sure that the stuff that I communicate to you is accurate in terms of what were some of the outcomes. So first, let's have a discussion about the politicians. Of course, there was the drama around whether or not Donald Trump would eventually allow some sort of participation from the Americans. I should say that as I understood it last week, I'm off social media, but as I understood it last week, there was some sort of contagion or argument between the South Africans and the Americans about what it would mean for the Americans to participate and what participation actually meant. I think there are a few points to make here, and I heard Minister, I think it's Ncheveni, make this point, but I'd made a similar point to somebody circa 2-3 weeks ago when this whole thing started. I'm just Vusi. Like, I'm just a guy. And yet, even when I travel into countries, we've got a security team that helps us in the firm with risk and risk assessment and analysis, not only for myself, but the other executives in the business. So even when I travel into countries, there is typically a process to follow. This process includes, sending a reconnaissance person or team into the country to do reconnaissance, to go and check the routes, the travel, the hotel, the place we're staying, the airports, all of those things. So you don't arrive and get surprised. And I'm a private citizen. Could you imagine then if you were the Deputy President of the United States? Like, how much forewarning goes into you traveling into the country? So let's set a few things aside. First, even before it was announced by the White House that there would be no participation by the United States, I can assure you that the people from the United States had already started the reconnaissance. Firstly. Secondly, a very dear friend of mine works in the security sector, private security, and she made me aware that she was a part of the people who was doing some or other work that had to do with the security and risk assessments by the United States of America. So there was already stuff done to get the Americans into the country, which is to say, when the decision came from the White House that they would not participate, I am almost sure that money had already been spent on this, but I'm almost sure that it would have had second-order effects. And some of these second-order effects would be a cancellation then of protocol rights, a cancellation of access rights, a cancellation of VIP rights, and a whole host of other things, right? They would have had to remove those from the system because somebody could use those to get into the venue and God knows do what with it. That then notwithstanding, when, as I think it was communicated last week, that somebody would be allocated by the United States Embassy, which I should tell you is about as near as makes no difference from where I'm sat, maybe 50 meters from my office. Like, my office is, as the gyro flies, about 50 meters from the American Embassy. So it was then said by Washington that somebody would go from the embassy and go into the summit, and I think to collect whatever it was that came out of the summit. Whatever you say, here is what is pretty clear. First, it's pretty clear that the attempts to resolve the issues between South Africa and the United States is a long way from over still. Even after President Cyril Ramaphosa went to the White House, it's pretty clear we're a long way from those issues being resolved. Secondly, it's pretty clear that we're not in an era of diplomacy by any degree of reason. It's pretty clear. Like, we're at the era of diplomacy by who can say the most, who can bully the most. I heard the president, I believe it's the spokesperson for the United States president, said that she had heard that the South African president was running his mouth. I mean, excuse my language, holy shit. How do you say that about another head of state, right? And I think that level of language demonstrates the contemptuous nature of that relationship. So for what it's worth, to all South Africans watching this, set aside your expectations. We're not going to, at any point in time, have any level of cordial relationships at a nation-state level between South Africa and the United States. I don't see it, not as long as these two administrations are in power. That's just my assessment from afar. But here's what it did mean for the context of this conference taking place. So the United States snubbed the conference. There was no representation at the G20 level. I should tell you, at B20, I think they were the first or the second most represented nation state in the business conversations was United States and United States businesses. They have to be. There's something in an order of 400 to 600 American companies operating in South Africa, right? So the United States snubbed the G20. But of course, Argentina did something similar, and there are things said about how close the relationship is between, Trump and Milei. Say whatever you will about that. That notwithstanding, though, Africa, Asia, in particular Southeast Asia, Latin America, dominated the room. Absolutely dominated the room. The G20 countries usually represent 85% of the global economy. 85%. Without the United States, a massive 25% of the GDP influence was missing from the room. 25%. So for sure, that has something to do with the materiality of some of the declarations and resolutions that have been made, but notwithstanding, those declarations and resolutions were made nonetheless. At a B20 level, I think a big part of the conversation there obviously centered on this risk tax that Africa pays. And what I'm going to do for you is I'll explain a bit about this risk tax in a minute. But let's go back to the point about the G20. So what were the outcomes? What were the wins? What were the things that came out of that I think you need to be aware of? I love this, and I heard one of the pundits say it, that there was a declaration basically to the order of the minerals are ours. Go and read, I think it's Sobukwa's book, The Land is Ours, right? And I think it's a poetic borrowing of the titling of that book, this idea that the minerals are ours. And the point here is that it was argued by the delegation coming from many parts of Africa that Africa is tired of shipping dirt and buying finished products. We, some time ago in our firm, in our consulting firm, Iconoclast Knowledge Bureau, went through government policy documents and speeches, and we looked for the first time in South Africa specifically that a South African head of state mentioned the word beneficiation, and we could trace it back to around 1997. Now, it probably has been said before, we couldn't find record of it. But we were looking at, for the first time, a South African head of state in the new South Africa spoke about beneficiation. We could trace it back to the year 1997, which means the conversation about beneficiation has been happening for close on 30 years now. What the G20 has resolved, though, is that now they want beneficiation at source, and they've adopted this. What this quite simply means is that in the country where the minerals are mined, beneficiation should take place. Let me tell you that if a smidge of this takes place, it would be transformative for the economics of all of Africa. To date, currently, Africa captures something like 5% of all of its minerals, 5% of the value creation of all of its minerals. Could you imagine what would happen if we just double that number, triple that number, maybe just quadruple that number? Let's get to 25, 30, 40%. What would it look like then? So processing locally could increase revenues of these countries by hundreds of billions of dollars. And it's not something that should be snubbed at. This is actually a very important and a very material point. Where I come from, in the East Rand, a big part of the large industries around where I grew up were industries based around beneficiation. So around the Benoni, Boksburg, Brakpan area, where these like mines, where stuff would be mined, And between the mines and somewhere where the factory was, there was a train that was built where you would move the goods from the mine into some sort of processing plant or some sort of beneficiation plant. Then from there, you'd move it into some sort of production plant where you would convert it into a finished product. Then it would go into the manufacture process, and then, of course, into the sales process. So all of these things were taking place in South Africa at the time, in part because the apartheid economy was built around import substitution. But the point here is that if all of these African countries can get right this idea of beneficiating at source, it changes the unit economics of Africa. The second point was the debt trap and debt reform. I'm on the record with this, and I spend a lot of time traveling the continent, so I can speak about this with some semblance of authority, given the extent of my travel in the continent and my proximity to some of the people who work in either treasury functions or finance departments or even developmental finance institutions all across the continent at the highest levels. I can make this statement with some semblance of authority that Africa, frankly, is overtaxed when it comes to its debt servicing costs. The fact is that African countries are just paying way too much debt servicing costs to be able to afford doctors. Now, what most people don't understand is this. Every dollar that goes into paying an interest charge is a dollar that doesn't go into social services, and it's a dollar that doesn't go into infrastructure. So for nation states, they've got to make a decision between do they pay for healthcare facilities, roads, ports, schools, or do they pay for the debt servicing costs for debt that they would have raised to often actually just run their budgets, not even take on capital expenditure programs. And so this summit committed to reforming the International Monetary Fund and the World Bank, who, it should be said by several people, were actually lambasted for issuing predatory loans to some nation states. And it'll be interesting to see where that opens. I listened to Professor Jeffrey Sachs speak about the fact that a part of the reason this is the case is because of where the IMF and the World Bank are located, right? And when they were founded, by the way, right, when they were founded and where they are geographically located, that gives them the compass of how their policy direction is being oriented and being driven. These are the views of Professor Jeffrey Sachs. In last year, in 2020, I caught the stat and it just caught my eye. Developing nations paid $921 billion in interest alone. That's not the principal amount of the loans. That's interest. $921 billion for developing nations. Said differently, the GDP of Africa, last I checked, was circa $2.8 trillion. In other words, the debt servicing costs of all developing nations is something like 30%, 33% of the GDP of all of Africa. I mean, that's just untenable. Today, 22 African countries spend more on debt interest than they do on public health care. More on debt than on taking care of sick people in their countries. It's extraordinary that these are the things that are happening, but this is the world we're at. So the second point they made there was that you got to reform these financing institutions, and you've got to look at the role that the International Monetary Fund plays, the World Bank plays, and how these institutions are sometimes perpetuating a system where the global financial architecture is being used to keep the disadvantaged disadvantaged. This is why you would have heard somewhere in the politics people talk about a re-engineering of the global financial architecture system, right? You would have seen the developing nations forming their own new developing bank or something like this, which is often colloquially referred to as the BRICS Bank. These are all the aims at making sure that they can change the debt servicing costs for developing nations. So that's the second point. The third was the Green Pledge. Now, this one is interesting. I myself have views on the green economy, but this one is interesting. So there was a promise that came out to triple the renewable energy spending, and this time with actual money. South Africa confirmed that it had targeted a 45 gigawatts of renewable energy by the year 2035. 45 gigawatts. To put it in context, the current generation capacity in South Africa, as I understand it, is somewhere around 63 gigawatts. So that's close on 80%, maybe a little bit more, of the current generation capacity that South Africa has committed to by the year 2035 in renewables. It's up, by the way. This 45 is up from around 17. So massive, massive, massive commitment there. And to kickstart it, the Cross-Boundary Energy Project has pledged $1 billion specifically for African projects. So specifically for African projects. So that sets aside the G20. Lots of arguing, lots of, riff-raff, who's coming, who's not, and all of these commitments made. But I think what's important for you as a viewer watching this is understanding some of the headline numbers, because those headline numbers are important. You will begin to see, as a viewer watching this channel, that even in the country that you're in, it's probable that you're going to see your governments begin to articulate policy positions based on some of these pledges that they would have made at the G20 summit. So that's the government. Let's talk my favorite subject. Let's talk business. So what did the B20 say? Well, the B20 first and foremost focused itself on, as they called it, fixing the Africa risk premium. I listened to Sim Tshabalala, the CEO of Standard Bank, speaking at the Bloomberg Africa Summit. And he made the point that I believe it's Cote d'Ivoire or Senegal, one of the West African nations, has about the same on the data points level credit score, if you will, as Serbia. But that it is actually, its debt is priced higher than Serbia. And he could only make the point that it must be on account of the fact that it is in Africa. In fact, you can go and find the video. He calls it scandalous, right? Which for somebody as articulate, as measured as Sim Tshabalala would tell you how profound a statement that is. Sim Tshabalala, I think, was also ahead of the part of the B20, one of the B20 channels or legs. They issued a report. It sat in my desk. I haven't had a chance to look at it yet, but great work that they did there. Under Sim Tshabalala's chairmanship, together with a cohort of other business leaders, and they looked at several issues, not the least of which was this debt servicing cost. And then, of course, they looked in the financial sector. And one of the points they make is it's really, really important to have a look at the regulatory burden or hurdles placed on bank. There is now huge discussions on Basel III and what banks and what the banking ecosystem needs to do to rethink and reframe the regulatory prescripts of Basel III. I heard Trevor Manuel, who's now the chairman of Old Mutual, yesterday making similar points on an online interview. So it's pretty clear that there are movements here to go, hey guys, there's an architecture here from a regulatory perspective. This architecture might not be working for our environment. But here are the points that you need to know. Africa today pays more to borrow money, right, just because it's Africa, even when the projects are solid. So the B20 demanded transparency from credit ratings agencies. This is a huge thing, by the way. This transparency from credit ratings agencies is absolutely a huge thing. It's still, to me, as a private citizen, the most extraordinary thing that we have private institutions like credit ratings agencies exerting force over sovereign states by pricing the debt that those sovereign states are able to issue. It still, to me, appears completely lopsided, but be that as it may. The Africa risk premium is roughly 400 basis points, so that's 4%. While the US pays something like 4.2% interest on a 10-year bond yield, right? African nations with solid fundamentals are forced to pay anything between 8.5 to 10%. So some work to be done there around unlocking or fixing the Africa risk premium. First thing that came out. The second is the one that excited me the most. Unlocking pension funds. Circa 2018, maybe 2019, I was invited to an event happening in South Africa at the IDC by, I think it was Ati who had invited me. And the president, Cyril Ramaphosa, was going to be speaking at this event. And there were a number of us who were given the opportunity to ask him questions. I was one of the people who had the opportunity to ask him a question at the IDC in a gathered room full of finance professionals. And my question to the president was quite simply this. We have a huge allocation of capital sitting in pension funds. Massive allocation of capital sitting in pension funds. And even with Regulation 28 in South Africa, You find that Revelation 28 gives the limits of what pension funds can allocate to alternative asset classes. These include, of course, energy, renewable energy. It includes private equity, venture capital, my spaces that I'm very, very passionate about, now private debt. But it gives limits, and it doesn't necessarily prescribe actual percentages. And a lot of work was done with Regulation 28 in South Africa, Regulation 28 in Namibia, and it's got different permutations in different parts of the world. But the point is this. A client of ours, and has been for many years, is the NSSF in Uganda. They've been on a drive to get pension funds to become more invested in the real economy. Let me explain this to you here so that you understand it, because I think it's important that you understand it. Here's how the movie basically goes. If you and I decide that we're going to take R1 billion and invest it on the JSE, with the greatest of respect for the people at the JSE, and believe me, I have a lot of respect for the people at the JSE. One of my prizes sat over there, you won't see it in my boardroom, is an honorarium that I got from the JSE speaking at a thing there. Love the people at the JSE. But with the greatest of respect from the people at the JSE, investing in the financial economy is not creating real economy wealth. It doesn't grow GDPs, right? A friend of mine, Vinnie Lingham, made this point to me many years ago, and I've copied the point and made it several times after. The way to build economies is to drive economic activity at the real economy level. To do this, institutions and consumers must support builders and entrepreneurs. There is just no other way to do it. So the point here is that you have to get money circulating in the real economy. Now, listen, I'm situated in arguably the hub of financialization in all of Africa. My office is right in the middle of the richest square mile, as they tell us in Africa. And I always say to people, I'm not necessarily sure that that's true. I think it's the richest square aggregation mile in all of Africa. I think all of the large firms that are operating all across the continent aggregate their reportings and report from here. And so, you could argue based on the PO box address or the physical address of where their head offices are located that this is the richest square mile. But it's a quiet space. You can tell this is where the thinking takes place, because this here around me is where the management takes place, but not necessarily the economic activity takes place. I mention this because I don't know for how long I've been saying, you've got to get money in the real economy. You've got to finance builders, shapers, entrepreneurs, founders to actually build, shape, entrepreneur, and found things. And when they do, you've got to pay money, real money to those entrepreneurs, offering those goods and services, because that's how you drive economic activity. So if I were a shareholder at BYD and I sold you my shares, I would make money. You would have shares, and if you sold them on, you might make money. But in the real economy, you and I haven't created any impact. Does that make sense? So the point I'm making here is it's really important for conversations around where does capital go to cascade not only capital in the financial markets, but also capital in the real economy. This is why we founded our firm over 10 years ago. We pride ourselves in the fact that we invest in real businesses, creating real value for real people in the real economy. I don't know how long, I was saying real economy before it was the cool thing to say at conferences. That's how long I've been saying it, right? And it is the harder work to do, for sure. It's the harder work to do, because I'm not simply, taking a position or taking a short on this or putting a call option on that, or, and I'm not saying simply to be glib about what those people do. It's an incredibly sophisticated industry. I get it. But building businesses, making sure that operators know how to operate, making sure that management teams know how to manage, that leaders know how to lead, building operational capacity into those businesses, and ensuring that you've got operational alpha is everything for what we do in our firm. So I feel very passionately about this. The NSSF, to arc back to the point I was making, in Uganda started a process. I saw they were putting together a gathering of pension funds from across the continent to come together and to talk about how do we ensure that pension funds in the continent are invested in the real economy. And it's a big deal. I think you can invest, in a 5 or 10 year bond in Zambia at double-digit returns. Double-digit returns, which means that the risk-free rate in fact, let me check. I'll check for you. I'll tell you now exactly what is the the bond yield. So bond yield, treasury yield, Zambia. And I don't even want to have a look at the curve. Let's have a look here. Let's have a look here. Listen to this. The yield on the Zambia government bond 10-year held steady at 18.21% as at 14th November 2025. 18% yield. Let me explain it for those of us in the room who don't get what this means. If the government is willing to pay you 18% for you to borrow them money, because that's in effect what you do when you buy a government bond. The government issues a bond and says, we will pay you a yield on a coupon rate, right? Every single year, okay? And then the bond at a certain point in time matures. But the government is saying, we will pay 18%. Now, for all intent and purpose, the government rate is often called a risk-free rate because governments have the lowest propensity for default. It's not always true. There are governments that have most recently defaulted. Don't need to get into the details of that. Okay. So the risk-free rate in Zambia is 18%. Okay. What that means is, for an entrepreneur building a business in Zambia, they've got to generate at least 18% in IRR for any investor to even look at giving them money. Otherwise, the investor just takes the money and buys government bonds. So risk-free rate is 18% in Zambia, 10-year on the 10-year bond. Then there's all the other premiums, what we in finance call beta, that you've got to calculate. There's the illiquidity risk, because if you're buying a privately held business, it's not as if you can just sell the shares on an exchange. It's a privately held business, so it's illiquid. So there's the illiquidity premium. Often there's the sectoral premium. Then there's the operator premium. Then there's the stage premium. There's like so many premiums. Which means if you were to invest in a real early stage business in Zambia, it's going to need to generate something like a 30% IRR for you to even look at it and say, I'm actually willing to put money into this business. And what business can give you that? So if you are watching this and you're in Zambia, I'd love to hear from you guys, but how easy is it for you to raise money from banks? And a big part of the reason is precisely because the yields from these governments is so high that often entrepreneurs in the real economy are competing with governments who are borrowing money from the same financial institutions. And when the money does go into the real economy, then goes into probably the most secured asset class, maybe even the oldest asset class in the world, gold, and then real estate. And you can't compete both with the security of the asset class as well as the yield of the asset class. It should be the case that if an asset class is secure, the yield is fairly lower. And the more insecure the asset class, the higher the yield. This is the basic idea that the more risk you take, the more reward you get. But it isn't the case. So the resolution here, to arc back to this point about unlocking pension funds, is that for many African nations, many governments are so broke that they don't even have enough money to put money into infrastructure. They need money to put money into infrastructure. And yet, because you've got the separation between state and pension fund institutions, the governments themselves have to borrow against the pensions, and it should be that way. By the way, ask anybody who was living, ask anybody who had money in a retirement savings or a pension fund in Zimbabwe between the year 2005 and 2015, what happened to their pension fund, and they'll tell you. They'll tell you. So there should be a separation between these two things. But the point I'm making here is that it's so important for us to get the pricing of these things right. There is an estimated, listen to this, $700 billion sitting in African pension funds. $700 billion. The B20 argues that just using a fraction of these could close the Africa infrastructure funding gap, which infrastructure funding gap is $100 billion. So you've got $700 billion sitting in pension funds, and you've got $100 billion sitting in an infrastructure funding gap. The redirect of some of this money, certainly not all of it, and I'm not saying by any stretch of the imagination that we should be glib and risky, and no. The rules must hold, the Chinese walls must still apply, the professionals should be, professional, the bureaucrats must bureaucrat, all of that stuff. But certainly there's got to be a thematic thinking in how we allocate this, and the B20, as it appears, agrees that this is something that's important. So what? Let's have a look at what this means. The United States was meant to attend the summit, but of course boycotted. Some will say that that's irrelevant. I fit into the group of people that say, well, 25% of the GDP that was supposed to be in the room, not in the room, is material. But that notwithstanding, you've done a fantastic job. And I think on this, you have to give it to the president of Cyril Ramaphosa, guys. I posted this comment on my Facebook about yesterday, in fact, and I said, well done, South Africa, on hosting a successful B20 and G20. And the number of negative comments, guys, it's really important not to be so obtuse that you don't even see it when something good happens. Like, I'm not saying that this government is faultless or that it is perfect, but on this, you've got to give it to them. They did a fantastic job at hosting the summit, at executing the summit. I can't begin to imagine, just from a security perspective alone, the things that they would have had to make sure to do that we had a summit that took place without incident. And on that, you've got to give it to them. Well done. Right? Then on the ability to coalesce the Global South and to get the Global South to arrive at a declaration. Huge. Then on the ability to get the declaration to be what it was. Right? Recall that before the summit took place, one of the things I think that came out of the United States was, there can be a leader statement, but not a declaration per se. So what did Cyril Ramaphosa do quite intelligently is at the beginning of the summit, he issued the declaration, which is really, really cool. Because in effect, what it meant was, even if there was some sort of sidebar participation from Argentina and or the United States, they would not have been in a position to revoke that. So this is good. Okay. So for the critics, that's that. For the optimists, for me, I think it means that we are finally at a conversation where we can move from aid to fair pricing, particularly on loans and minerals. On loans, price the loans fairly, and on the minerals, beneficiate its source. But to the realist, a declaration is paper. It's paper. So the $1 billion pledge is real. And the $921 billion debt is still due tomorrow. So a lot of work remains still to be done. I'd love to hear from you around what you think are going to be the implications of this, no matter where in the world you're watching this from, for your country, for your nation state. Share with me your thoughts and let me know what you think. From my perspective, as you guys know, I don't ordinarily kind of sit like this and do the long form content, the likes of which we've done. But this was a sufficiently important event. And our community is a big enough and a global enough community that I felt it was important that I take a little bit of time from the day and I share with you what were the deliberations and the discussions, what are the major data points, what were the contentious issues, what came out of these summits. And now I want to hear from you. What do you think will happen next? All right, everybody. I look forward to seeing you in the comment section. Cheers.